Ladies and gentlemen, good day and welcome to the KEC International Limited's Q3 FY22 earnings conference call. We have with us today from the management, Mr. Vimal Kejriwal, MD and CEO, and Mr. Rajiv Agrawal, CFO. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vimal Kejriwal. Thank you, and over to you, sir.
Thank you so much. Good morning to all of you. I welcome you all to the Q3 earnings call of KEC. I hope that you and your family are safe and healthy during these challenging times. Let me start with an update on the overall performance for the quarter and the 9 months, and thereafter talk about each of the respective businesses. We continue to have a robust order intake. We have secured our highest ever YTD order intake of 14,121 crores, a staggering growth of more than 2 times over last year. Large contributions in the order intake have been from our international T&D and civil businesses. This has significantly enhanced our YTD order book to an all-time high of rupees 24,400 crores, a robust growth of 36% over last year. Additionally, we have an L1 position in excess of rupees 4,000 crores. Our order book is well diversified across businesses with an equal share in both T&D and non-T&D businesses. Coming on to the financial performance, we have achieved revenues of rupees 3,340 crores for the quarter against 3,289 crores of Q3 last year. The growth could have been higher, but for the impact on our 3 ongoing projects in DMRC, RRTS due to the NGT issues and Supreme Court ban. The Supreme Court ban has now been lifted. The excessive and prolonged rainfall in certain areas of South India and intermittent challenges due to COVID in some international locations, including Brazil. Considering the continuing elevated levels of commodity prices and freight charges, we continue with our strategy to regulate the supply of towers and conductors to some of the projects as per the requirements of the project cycle. Notwithstanding this, our YTD 9-month revenue stand at rupees 9,467 crores with a growth of 8% on consolidated basis and 12% on standalone basis vis-a-vis 9 months last year. Considering our current order book and L1 position, we are very confident of a good growth going forward. Despite significant challenges, we have delivered double-digit EBITDA margins of 10.2% at the standalone level and 7.2% at the Concall level for the quarter. The standalone EBITDA margins for the quarter have improved by 90 basis points sequentially. We have delivered a PBT margin of 7.1% and a PAT margin of 5.1% at the standalone level. Our Concall PBT margin stands at 2.7 and PAT at 2.8%. The consolidated margins have been impacted primarily due to the continued time and cost escalations in SA Brazil due to the pandemic, elevated commodity prices and unusual rainfall in the year. Net debt as on 31st December 21 stands at rupees 2,913 crores. The debt has increased during the quarter due to some delays in collections from the railways. However, we expect the same to largely normalize in Q4. Now coming to the specific businesses, our T&D business continued to witness significant traction with YTD order intake of over 6,400 crores with a robust growth of 50% against last year. The inflows have been led by orders in the international markets, especially in the Middle East, SAARC and Americas. The business has achieved revenues of 1,610 crores for the quarter. The revenues are slightly lower due to the strategic realignment of dispatches in some projects as mentioned earlier and intermittent COVID challenges in Americas and SAARC, primarily Bangladesh. The overall tender pipeline in T&D continues to remain strong, especially in international T&D. We are also witnessing a gradual revival in the domestic T&D market with the significant upcoming opportunities of Green Energy Corridor Phase 2 and Leh-Ladakh HVDC lines. I presume you have read recently that the Leh-Ladakh HVDC lines Phase 1 have now been awarded to Power Grid on an RTM basis and will not go into TBCB. Majority of these tenders are expected to be announced by H1 FY23. In Brazil, the two legacy projects are on the verge of completion and are expected to be completed in Q4. Despite the significant challenges, we have successfully commissioned one EPC project during the quarter, and work on the three other EPC projects are going on as per schedule. We continue to see some challenges in the EPC project execution. We have secured a few large tower and hardware supply orders in Brazil. The supply prices and availability has eased significantly, but is still not fully resolved. Our railway business has achieved a revenue of 950 crores for the quarter, delivering a growth of 9% vis-a-vis Q3 last year. The business secured YTD orders of over 1,500 crores, a growth of 45% over last year. In line with this diversification journey, the business continues to deepen its presence in technologically enabled areas of metros through orders in OHE, power supply systems, and track laying for metros, and has also widened its presence in the conventional segments with orders in speed upgradation, port connectivity, tunnel ventilation, and railway siding. We have seen some good success with orders in these new areas, especially in the semi-high-speed rail under Mission Raftar, where our current market share is over 70%. The overall tender pipeline in railways continues to remain strong, with a blend of conventional, technologically enabled emerging areas, as well as international opportunities. Though the pipeline is robust, there is a delay in tendering awards of our tenders under evaluation in railways. The total amount is around 6,000 crores currently, which is under evaluation. Additionally, we are also witnessing increased competition, especially in the conventional segment, with the entry of road EPC players and Tier 2, Tier 3 EPC contractors. However, now that the requirement of tender bonds has come back from 1st January, we do see that the competition will ease up a little. Nevertheless, with the continued thrust on execution, a strong tender pipeline, and an order book of plus L1 of over 5,500 crores, we remain confident that railways will continue its growth momentum going ahead. Our civil business continues to be on a high growth trajectory as we delivered another quarter of strong performance with revenues of rupees 480 crores and an impressive growth of 1.8 times vis-a-vis Q3 last year. The business has also seen a record year in terms of order inflows, with orders exceeding 4,800 crores in YTD FY22, a stellar growth of 7 times over last year. The business continues to strengthen its presence in the growing areas of urban infrastructure and water pipeline segments, with its second large order for Chennai Metro and 4 orders in the water pipeline segment, aggregating to over 1,200 crores. The company is now executing 7 metro and RRTS aggregate value of 4,500 crores. The business continued its diversification by foraying in public spaces to its first airport order, reinforcing presence in the industrial with orders L1 in metals and mining, cement and FMCG segments, and expanding footprint in data centers. The uptick in order intake has significantly enhanced the order book plus L1 to an all-time high of over 7,000 crores. We are confident that this business will continue to be one of the key growth drivers for us going forward. In oil and gas business, we have completed the acquisition of 100% equity in Spur Infra in October 21, and Spur, as mentioned earlier, is a wholly owned subsidiary of KEC now. The business has started demonstrating exemplary performance post-acquisition, as it has secured new orders of 300 crores and clocked revenues of 70 crores in this quarter. We are also progressing well with the integration of Spur Infra with KEC's policies and processes to leverage synergies for faster growth. With an order book in excess of 800 crores, we are confident that this business will become a significant part of KEC's overall business portfolio going forward, both in India as well as overseas. Our cables business continued its superior performance as it achieved its highest ever quarterly revenue of rupees 387 crores, with a robust growth of over 27% vis-à-vis Q3 last year, contributed by growth across all segments. The business is progressing well with the development of new products. It has also received approvals for a few new products during the quarter. In Smart Infra, I am pleased to share that the business has secured an order as a Master System Integrator, MSI, for smart city components for 3 smart cities in Punjab. In terms of execution, the existing projects of Aurangabad and Bidkin Smart City and the project for integrated perimeter security system for defense airports are progressing well towards completion. Overall, we are pleased with the revenues and order intake despite significant challenges. We are making good progress in deploying several mechanization, automation, and digitalization initiatives across projects to improve productivity and quality of execution. However, the business environment continues to remain uncertain with the prevailing high commodity and freight costs and uncertain pandemic scenario. I would also like to add that we have commenced execution of quite a few projects in the T&D business, which have been secured recently based on the current commodity logistic costs. Having said that, with a strong focus on execution, a robust order book plus L1 of over 28,500 crores and a strong tender pipeline, we are confident of a good performance going forward. Thank you. And we are open to questions now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashish Shah from Centrum Broking. Please go ahead.
Yeah, good morning, sir. First question is on the working capital side. So there, our working capital has been increasing, we're saying because of railways, etc. But, what we are generally observing in many other engineering construction companies is that working capital broadly seems to be in a pretty okay shape. And the government is very clearly releasing more money to the various departments, etc., for payment. So why this particular situation that is happening with the railways that we are facing?
What is happening is that there is some churning happening in the railway ministry. In fact, there's a talk today I was seeing on television also saying that the railway PSUs may merge, etc. So I think there has been some internal reshuffling happening between the funding and all that of railways, within the railways, zonal railways, and the various PSUs like RVNL rights and ERCON, etc. So I think that's getting sorted out, and I think even in the month of January we did receive a lot of funds on railways. And the other piece is that on the net basis, railways we were cash positive for the last few months, but the collections have been slower. And I think the other two issues which we are there is, one is you are aware that we have got some AR in Afghanistan, which is not yet done. And the third piece is that SAE we have funded SAE to meet the losses. So that's one thing. So I think overall we do expect that the situation both from railways and overall as a company will start improving, and by Q4 it should be, I'll say, almost back to normal. Rajiv, you want to add something on this, please? Go ahead.
Vimal, I think you have elaborated. Basically, these are the 3 main issues which have impacted some working capital. But we are close to about 2,900 crore on a net debt basis, as against our guidance of 2,500 crore. Please also appreciate, one more thing, that there has been a growth for the 9 months period is roughly about 8 to 9% growth also is there in the company. So that also takes some additional working capital. But nevertheless, we are quite conscious of this fact that our net debt has expanded by 300-400 crore rupees over the guidance that we have been giving to the investors, and we are quite confident that we should be able to bring it within our guidance of 2,500 crore by the end of Q4.
Right. And sir, besides the net debt, there's also the acceptances number which has increased substantially. So interest costs, which typically we expect should remain in the 2% range has actually gone to 2.5% or so. So even that part is probably adding to the interest burden. So why is that also increasing so much?
So basically, if you look at for the 9-month period, we are exactly at the same level at 2.3% of the interest cost as against last 9 months also. So this is exactly in line with the last year, and only the Q3 we have seen the interest cost slightly higher, and also because of the fact that interest rates have also expanded in Q3. If you look at the GSEC securities, the interest rates have increased by almost 70 basis points from compared to the last year. The commercial paper market is also showing increase in the interest rate. So there also we are seeing roughly 0.5% to 0.7% interest rates are going up. So there is a interest rate increase all around. So that is also one of the factors. And obviously, Q3 has been some issues that we have already highlighted on account of the delays in some railways, and plus we have funded the losses in SAE, and obviously the Q3 is the first quarter post Afghanistan event where the money has not come. Q1, Q2 we had received money from regularly from Afghanistan. So these are the three factors, and we are quite sure we will normalize it by Q4.
Sure. Just last question, sir.
Yeah, go ahead.
Hello. Yeah, just one on the SAE part, if you can just give us a glide path on how do we see the losses kind of normalizing, or we achieving a break even or a profit. If you can just tell us how the Q4 is looking and how early next year how should we be looking at that? And also on the SAE, you said you funded some losses. If you can just indicate how much have you funded during this quarter or this year, it will be helpful. Thank you.
So Ashish, as I mentioned in my opening remarks, we expect that the 2 old orders which were loss-making, we had 3. One of them got completed in the last quarter. One is going to be, actually both of them should be completed this quarter. One will be, I think, over in this month itself, February. And the third order, there had been, we had arrived at a settlement with the client, and there had been some de-scoping, etc. So whatever is our scope will also get over in this quarter. So hopefully with this, all the losses on SAE for the old projects will get closed in this quarter. So this quarter will also see some pain very clearly. On the new projects, I think we are generally going well. So we do hope that from Q1 onwards, we should start seeing either a break even or maybe some minor losses which we continue, which are not accounted for this quarter. But broadly, we do expect that from Q1 we'll start seeing better numbers from SAE. Although we had expected to see better numbers in Q4, but unfortunately the projects could not be completed due to various factors. Some of it within our control, some not in our control. And so Q4 will still see some pain, not more than Q3 definitely, but it doesn't look like there will be more than that. But Q1 onwards, I think the pain will subside significantly. We may even, hopefully, we are trying to see if we can turn positive. But even if it is not, but it would be very small numbers. Okay. And
Sure, on the loss funding part, yeah.
Yeah, I think we have funded around 200 crores this year. Rajiv?
Absolutely, Vimal. We have funded. See, in the first 9 months, we have lost close to about 250 crores. The number is there in front of you in the console number and in the subsidiaries account. So that number ultimately has been funded either partly by way of equity and partly by way of taking additional loan.
Okay. Sure. Okay. Thank you. Thank you.
Thank you. The next question is from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Hi, sir. Congratulations on a decent performance during this quarter. Yes, my first question is, if I see the risks which are emanating for the company, so one is that working capital has been expanding. There has been delay in collections from railways. Second piece was SAE, then Afghanistan, and then commodity prices. So these 4-5 factors, have been impacting us negatively. So do you think the worst is behind us with respect to these factors now?
So if you look at, let me start with commodity price, which is the most talked about thing. I think on the steel side, we have been continuing to supply towers as we had said earlier. So I'll say a large part of the worst on steel is behind us. Okay. Aluminum is something which continues to be there. we have not done much of aluminum supply this year, and we don't expect to do it for at least the next few quarters, because that's why the projects don't require. Whatever the projects required has been set. So if the aluminum continues at this elevated level, then we will see some pain happening, but that pain would be accounted for in the margins, which we will discuss, let's say, later on for next year. Okay. As far as Afghanistan is concerned, I think we are in regular discussion with all the multilateral lenders, etc. And we do expect that we will start seeing some light of day in Afghanistan. As you may be aware, Government of India has already sent 3 consignments of the life-saving drugs, and I think now there has been a settlement on sending 50,000 tons of wheat through Pakistan. So clearly we are seeing that the interaction at the government levels are increasing. We are also seeing US government opening up and talking about sending money, etc. So all the lenders are very keen that they pay the money. However, they are waiting for opening up of the international banking transactions, which the talk is that they will open up very quickly. So I think Afghanistan is that. Working capital, as I mentioned earlier to Ashish, that we do expect that in Q4 we will rationalize, we should be able to normalize to a large extent. SAE, again, at Q4 we'll see some pain, but I think after Q4 we should start seeing a significant improvement in the numbers. I hope I've answered all your questions, Parikshit.
Yeah. So my second question was on SAE. So after ironing out the issues in the 3 projects and these projects getting completed this year, and some pain may get carried forward in the first quarter next year. So, but from the bidding perspective, profitability, growth, and so how you position now, SAE is positioned to now capture the opportunities which may emerge in next year. So how are you seeing opportunities for SAE playing out over the next year?
So Parikshit, one is that we have had some management changes in the Brazil setup, and we have sent one gentleman, I don't know if some of you may know him, Rakesh Gaur was running, he was part of international TNT that running our railway portfolio, and then was with Concall through, and then he joined us back. He's gone to head the operations in the last 2.5 months. Our order book there is currently around 1,000 crores. A large part of that is now on tower supplies and hardware supply. What we have done was that last year, once we saw the problems which were happening, we had actually slowed down on EPC order intake till we sort of settle all the issues. Now that all the issues are getting settled, we will start looking at the market, which is expanding. Okay, there is a large auction in June, and then there's another talk of a larger auction in December. So we do expect that the market to pick up. And also, as part of the entire shake-up, we have seen a few smaller EPC companies falling off. Okay. So I think competition will also slowly start coming down. And the last piece is that we have clearly seen the steel prices in Brazil and availability, which was a major issue, stabilizing. Okay. So we do hope that, next year onwards, we should start seeing better numbers in Brazil and SAE. The other part which does not get normally discussed is our Mexico operations, which also fall under SAE. And we are now clearly seeing that a lot of order traction coming out of the North American market, especially the US market. After quite some time, I think our factory in Mexico is now running virtually full, and we have a decent order book for the next 2 quarters also.
Okay. So just lastly on the railway segment, so if I understand correctly, when you have the metro projects, which are partly funded by state and sometimes funded by multilateral agencies jointly and with central government. So what is which part of the railways is really the pain point in terms of collections for you? So if you can just give me a little more granularity on that, and also the number of debtor days, or how much is the total receivables or net working capital trend over the last 2-3 quarters, how it has increased in this segment.
Rajiv can give you the details, but on the broader level, the pain point is still on the conventional railways. The pain point is not on the metro side or the joint ventures or the multilateral funded. Okay, the pain point remains in the conventional railway. As I said, there have been some changes which are happening in the overall system, which I think are now getting sorted out, and that's why I said that January we had a pretty decent collection. So Rajiv, you want to just give out some numbers on this or other thing on railways which we asked?
So, Vimal, I don't have the exact railway number in terms of the AR. My sense is it should be approximately in the ballpark of 2,500 crore. But exact number I can provide later on.
Sure, sir. Sure. So those were my questions. Thank you and all the best.
Thanks, Parikshit.
Thank you. The next question is from the line of Vivek Ramakrishnan from DSP Mutual Fund. Please go ahead.
Sir, first of all, congratulations on the robust order book. In terms of the, in terms of receivables and working capital was again going to be my question. I think a lot of it has been asked before. So if you could just give us the top 3-4 debtors who are there with you, that would be very useful in terms of debtors and amounts, because if one-off chunky payments comes, then this 2,500 crores would be easily achieved. So please, we can get that. That would be useful.
I'll ask Abhishek to give you later on, but I don't think there are any single large, chunky debtors that way. I don't think generally our debtors have been spread over. See, what has happened is that at one point of time, Powerhead used to be our biggest client. Okay. Then it became RVNL. Of late now, the business has actually spread across, especially with civil becoming large business. Our debtors are actually spread across. So I'm not saying that there are some very large debtors, but basically I'll say one or two zonal railways. And that is also because one more thing which we did not discuss is that the nature of business in railways is changing, with most of the tenders now coming out on an EPC basis. Okay. And with the change in the basis, there has been some discomfort in the zonal railways on how to pay, how to pass bills, and what to see in EPC and all that, which is now getting sorted out, because all the projects are now coming on EPC. So largely it would be if the one or two of the zonal railways, it would be RVNL. It would obviously be Afghanistan. There could be one or two private. I don't think international we have anything major. Rajiv, anything else you want to say?
No. Well, it is largely basically what is happening is, partly it is Afghanistan issue. Obviously, Afghanistan, if would have continued normal, probably we would have received 150 crore rupees, lower number on the debtor side and working capital. But largely, our debtors are all spread out. Actually, we don't have any chunky payment like 200, 300 crore from a single kind, nothing of that sort. So even in railways where, we are talking about, let's say, some delays. So they are spread out on a number of projects. It is not that only, one or two projects, there is a significant amount which is pending. So it is
spread across various projects. It's spread across various projects, and each project in railways, each zone is different. In fact, we have got, I think, at least 13, 14 clients in railways. Okay, it's not one single client. Except obviously RVNL was not a client. So there will be some outstandings from RVNL. Others are all spread across railway zones and all that.
Sure, sir. I understand that. It's just that, while the project may be spread out, the nature of the delays seem to be similar across the various, because of all the things that we have well explained. So if we could have that railways number, like the previous caller also asked, that would be very useful. But moving on to the international business.
Abhishek will give you the numbers, okay? Just be in touch with Abhishek, he can give you more data on the numbers. Yeah, please go ahead.
Sure. The second thing is on the international projects. Number one, I have two just questions. One, given all that has happened, wasn't there a concept of a force majeure? Because a lot of the things you've done which is beyond your control, and that seems to be a tough position to be in. And the second question is that you had mentioned that you'll be hedging some of the aluminum prices. Is there any possibility at all? I know there's no active steel hedging market, but strategically tie up with a few suppliers who will give you steel at a contracted price. Is that possible at all? That will reduce your risk, especially because your T&D order book, you said, is significantly from international projects where the commodity price pass-through is not there.
विवेक स्टील में अभी तक तो हेजिंग का मैकेनिज्म समझ में नहीं आया है मेरे को, एक्सेप्ट if you contract internationally, then by the time you steel, it is 3 months, 4 months, and all that. So that's the only way. Otherwise, if you look at the Indian steel, the government sector doesn't hold it even for one day. At the time of loading, whatever is the price is applicable. Obviously, if you look at JSPL and others, that would be a price which holds till they announce the next change in the pricing. Okay. Aluminum, obviously you can hedge, but there will be time gaps between when you bid and when you have been awarded, etc., which causes this problem. And I think one thing we have to understand is that with COVID, there has been a huge volatility in the base metals. And a couple of reasons why we see some of the impact of raw material prices is that if you remember when this whole thing started in March and all that in India, etc., and otherwise, the metal prices and all had touched a rock bottom at that point of time. And that was the time when we had bid for a few projects. After that, the entire project pipeline, etc., started drying up. And then the metal prices went up. So by the time the projects came back to us for award, we had two choices. Either you refuse all the projects and take a hit on your revenue as some companies did, or take up all these projects knowing well that the prices have gone up, but the expectation was that metal prices have never remained at such an elevated level for such a long time. At least in my last 20 years, I have not seen the elevated prices of aluminum or steel and all that for 15, 20, 24 months continuously without even coming down. So I think the choice we exercised and we talked with everyone, and then that we should protect our revenues, which is why you see that in spite of all the problems, for the 9 months we have had 8% growth in revenues. I think it was a conscious choice on the metal side. Yeah, Vivek?
Sure, sir. I mean, I can appreciate the scale of the problems that you face, and so well done and all the best, sir.
Thank you so much. Thank you.
Thank you. The next question is from the line of Swarnim Maheshwari from Edelweiss Securities. Please go ahead.
Yeah, hello sir. Good morning and thanks for the opportunity.
Morning, Swarnim.
Yes, sir. Sir, my first question is on SAE. Now, in one of the earlier participants' reply, you mentioned that you expect to break even from Q1. And I believe that we have won about 1,000 crores worth of order in 9 months so far. So, is it that the new orders are also coming at quite a low margin, or, if you can give some sort of guidance on the SAE margin trajectory for FY23/24?
So, Swarnim, difficult to give you a guidance trajectory today. The new orders have not come at a low margin, if you want to call it. The margins would be between 6% to 15% or 20% also some of the orders. So it's not at a low margin when you have taken the orders. The issue is that there is a large volatility still continuing in the steel prices specifically and logistic costs. Okay. Unfortunately, Brazil has had last couple of months have also been pretty bad in terms of rainfall, etc. I think the climate change, and we are hearing about the Amazon deforesting, etc. There have been significant changes which have happened. So where will you end up with those margins? I do not know today, but the orders have been taken at decent margins, number one. Number two, what I had said was that the old legacy orders will get over in this quarter. So I think a major pain and whatever else what we are seeing at 70-80 crores every quarter should get over by this quarter end. Okay. The new orders, I think, are reasonably okay. We have to wait and watch, when we are closing those orders and including what happens. Which is why I said that from Q1 onwards, you will start seeing a turnaround in the SAE fortunes. Whether Q1 itself will become positive or Q2 will become positive, I do not know honestly today. But we don't expect that there will be significant pain or large pains in Q1. And that's what I said. And that's what I'll repeat again for it. Yeah.
So, Vimal, just to add what you have said, basically the order intake in the first 9 to 10 months in SAE have been largely on account of the tower supply and the hardware supply, and which we have taken at a very healthy margin. In fact, ranging from 8 to 10% margins. As Vimal said, that unfortunately, the prices of raw material have still not stabilized. So we'll have to see that what happens. But there is a IPCA adjustment which is available. But definitely, all these orders which have been booked, they have been booked at a healthy margin, and obviously at the current prices applicable at the time of booking the order. So our sense is that these orders of supply of hardware and towers, they will be definitely giving us a profit. Okay, they will be in profit even when we execute, even let's say in terms of the volatile raw material prices. The only thing is that, we have not booked any EPC order, so that we'll have to decide, going forward.
Got it. So my second question is, our business is scaling up really well, and on the intake side and on the revenue side. I just wanted to understand what's the margin trajectory over there. Are we broadly converging there with the T&D margins? Where are we in that that journey basically?
So I think our margins are broadly converging towards T&D both ways. One is because the T&D margins came down, and second because the civil margins went up. Okay. So right. I think we are quite happy with the margins which we are getting there. Okay. And also on the working capital and cash flow, and also on the widening gamut of orders. Like as I mentioned, we have got, I think now 5 or 6 orders we are executing in water. We just got our new data center order. We are delivering a very large public space order which we have been trying for a long time. I think on the civil side, something we are pretty happy virtually on all counts.
No, that's great, sir. That's really heartening to see. Our diversification strategy is actually kind of getting validated again. Sir, my one last question on bookkeeping. The L1 pipeline of 4,500 crores, what's really the breakup with respect to verticals?
I don't have it now, but I think 50% of it is railways and balance will be T&D. I wish I can give you, but I think broadly that's the structure of it. Okay. Broadly 50% would be railways and 50% would be non-railways. Yeah. Actually,
sure, sir.
TL is around I think that's broadly. Sorry, T&D is around 30%, non-T&D is around 70%. That's the breakup.
Okay, got it. Sir, thank you so much and wish you all the best.
Thank you, Swati.
Thank you. The next question is from the line of Priyankar Biswas. Please go ahead. From Nomura.
Yes, good morning, sir.
Morning, Peter.
My first question is, you had secured an inaugural order in European Union as well, right, in this quarter. So what I wanted to understand is, what are your expansion plans in the EU going forward? And is there any synergistic link with the UAE factory that you had set up, I think, in the last quarter of the previous fiscal? So can you help us on that how does the business model work here?
So Priyankar, we are right now not looking very actively or aggressively at EPC orders in the EU. Okay. This order which we got was on a bordering country which could be classified as European, it could be classified as former Soviet Union, which is East Europe. We will continue to look at EPC orders in that region. Okay, we're still not looking at hardcore, West Europe and that side. However, with the Dubai factory, and I think you very rightly put it that way, we are looking at doing some, can we do some tower supplies to that region? And we have got quite a few inquiries coming in from that region. So maybe, hopefully next year onwards, you may start seeing some supplies from us to that market. And another market which we did not talk about could be the Australia market, because there are some large projects coming up, and with the current political relationship between Australia and China, we do see that there will be a shift in the procurement from Australia. So EU and Europe and Australia could be two markets where you could see some tower supplies happening from our Dubai factory.
Okay. And sir, if I have to ask, can you give us a status? I can understand that during 1H FY21, the orders that were secured in a low commodity price environment, that is where we are facing the pain now, right, due to the increase in the commodity prices. So, are we largely done on those projects, which were secured probably in 1H FY21, and some commentary on that, or and when can we expect the overall broader level margins to sort of stabilize? I mean, you used to do something like 10%.
So Priyankar, if you look at our standalone margins, we are at 10.2%, even today with all the problems which we have faced. Okay. Once we are able to sort out the Brazil issues, which we have been saying we'll be able to do it, unfortunately, we have not been able to do it as of now. I think margins will start coming back. When I do not know, to be very honest with you, whether it will be Q2 or Q3 next year, where we start showing the required levels of margins. Q4 will definitely be still continue to have some pain, so I don't see a significant improvement happening in Q4. I don't think there will be deterioration also. I don't see that happening. Coming back to your first question on H1 orders of FY21, I'll say largely on the steel front, a large portion has been done away with. We have supplied most of the steel, etc. Balance will probably get supplied in this quarter or maybe Q1, which is why I said that, the margins will start showing a significant improvement from probably Q2 or Q3 next year. Aluminum is something which we have not yet supplied. We are slowly doing it, and we are still hopeful, and a lot of advices saying that post-Olympics, post-Chinese New Year and all that, like copper, aluminum will also start connecting. So we will wait and watch. We still have the project requirements are not there before at least another, I'll say 3 quarters, not before Q3. See, for the way we have taken those orders, and when you said that we took them knowingly, most of these orders are pretty large orders for, unlike a normal transmission order for 30 to 36 months. So that has given us a lot of flexibility in timing our supplies. I hope I'm clear.
Yes, absolutely clear, sir. And since your order inflows have been quite strong so far, like 9 months, like 140 billion plus. So where can we hope to close in this year? I mean, FY22. I mean, target that you may have in mind.
Our internal targets are close to 18,000 crores. Let me be very honest with you. Okay. So we are still trying to see if we can convert some of the L1s into orders, and we have got, as I said, a large tender pipeline. So ideally, we would like to reach there. I am not sure whether we can reach there or not. So I think we'll end up between 14 and 18 probably. Okay. There are some very large metro tenders to be quoted. There are a couple of large tenders in Middle East to be quoted. Okay. And if things go well, we should be doing a reasonable amount, maybe 16,000, 17,000. I don't know, honestly. But as I said, our target was 18,000. Okay.
Mm-hmm. And so the last question from my side. So on oil and gas, this new subsidiary, so what sort of growth trajectory can we expect from that? So should the past growth like we have seen in, let's say, railways and civil, can that be taken as a sort of proxy? Can we achieve that sort of a growth with this business?
The growth should be faster than that. Okay. The reason is that railway and civil was completely done organically. Here it is an inorganic growth where you have acquired a large amount of capability upfront. So my view is that if you take the current company which we acquired, and we had said last year they had 100 crores of turnover. This year we probably expect them to do almost 450 crores of turnover. Okay. Although part of it will not come in our books because we acquired it in October. So I think next year onwards we will definitely see 100% or maybe 200% growth at least in the next 1 year or maybe even 2 years. So the growth trajectory for oil and gas will be much faster than what we had seen in the initial days of both civil and railways.
As a margin-wise, it would be broadly similar to the overall portfolio? Or
I think right now we think it will be similar. I think the good part there is the capital employed is pretty less. So even if at the level it may be slightly similar or lower, but at the PBT level it would be equal or better than the current businesses.
Okay, sir. Thank you so much, sir.
Thank you, Priyanka. Thank you.
Thank you. The next question is from the line of Renu Baid from IIFL. Please go ahead.
Yeah, hi. Good morning, sir. So my first question is around the core T&D business. Firstly, as in given that the overall execution even in the core portfolio has been weak as of SAE, can you just help us understand what was the broad revenue growth between domestic and international T&D in the current quarter of YTD? And given the fact that domestic T&D, international T&D orders has been fairly good and backlog is up by almost 50%. So what is the kind of ramp up in the T&D revenues that we expect over the next 12-18 months, both in terms of revenue going forward in the next fiscal?
So basically what has happened, is that India business has degrown and international business has grown. Okay, and if you look at probably the numbers, we would have probably grown by the same percentages between the two businesses. And including SAE, I think we had a negative number of growth. Going forward, clearly we are seeing a large ramp up happening in the international business. I think the next year international will probably, I'm sticking my out, will probably grow by at least 35-30% from the current year in international. India growth will largely depend upon what happens with the Leh Ladakh and the Green Energy Corridor orders. Okay, I think there's a Supreme Court order expected today, if I'm not wrong, 1st February, on the entire GIB and all that. They issued an order and there's a representation being made and all that. So that I think order should come in today. That should also help us in clearing some pieces of what is happening. But the Leh Ladakh, I think the phase 1 has been given to Power Grid. That's around 18,000 crores of orders to be done by Power Grid. Right now they are in the midst of framing up the packages, etc. So if those orders get issued by, let's say, June, July or something, there will be significant improvement happening in India. Otherwise, I think India, we see the business flat, but we are seeing a lot of growth happening in Bangladesh. For us, Bangladesh is part of the India portfolio, South Asia, etc. Bangladesh, we are seeing a lot of new projects coming up. Internationally, Middle East is doing very well, and also part of the CIS is doing well. We already have got one new order in CIS which we announced last time, and there are a couple of new tenders which are coming up. So I think internationally we are very happy what we are achieved and what we are seeing.
Right. Because overall, when we see as in last few years, our order backlog in the international, as an overall transmission business ex of SAE, has been approximately 10,000 crores. But on the revenue side, we have struggled to broadly move beyond 6,500 crores. So we're just trying to understand, while this year has been plagued by multiple challenges on domestic side, somehow on the revenue side, we have struggled to deliver similar kind of growth despite orders coming with shorter execution cycle, etc. So we're just trying to connect the dots. Where are we missing or lagging either in terms of mix or execution headwinds on the way? And if we see the environment improving, then probably coming towards 23, 24, can we see X of SAE, the core transmission business, coming back to double-digit growth, or that still remains a challenge?
So the expectation is that next year we should have a double-digit growth. Expectation is that next year we'll have a double-digit growth definitely in the transmission business, because this year has been bad in any case. Okay.
Right.
And the amount of aluminum which we discussed, conductor and steel and all that, which we have deferred for the last 12 months. Okay. Clearly, I don't see any major issue on having a double-digit growth in this industry. And secondly, coming to our question of, I was not very happy with the word used by struggling to this. I don't think it's a question of struggle in execution, etc. I think part of it is as I said, deliberate, where we have timed the execution going forward. Part of it is geopolitical, where Afghanistan since last August we have had zero execution. I realize I would have done maybe 150, 200. Actually, our plan was to do more than 300, 400 crores of execution in that country during this year. There have been various reasons, but not attributable to inability to do construction. Let me put it this way. Okay.
Yeah, agreed. There's a combination of external factors also here.
Yeah. And also COVID and all that. Today also now we are seeing that again COVID is coming up, and so I know visa issues. Like Brazil had not issued a single visa for the last 18 months. They just issued the first visas now. So you could not send anyone. Like we can keep on talking about SAE struggling and all that, but unfortunately, COVID did not help. With all the problems which we had, we wanted to strengthen the team, and the embassy just refused to issue a single visa. Okay.
Got it.
So I think that's what has happened in transmission. But I think I'm very confident that next year we will have a significant growth in transmission.
Sure. And along with the same time, next year, by the time, as in by 1Q, most of the old fixed price projects will be broadly done with, and margins should start trending back to, at a company level, back to 9 to 10% levels as we come towards mid of next fiscal year.
I think most of them will be done with, except some part of conductor supplies. Okay, because we don't need the conductor supplies till September, and unless the aluminum prices come down, I don't see supplying at a loss or a low prices when I can still wait for a chance for it to come down. Okay, so except for that piece, which may or may not happen, you are absolutely right that by September we would be out of all our orders.
Got it. And in the rail segment, while we have done pretty good in terms of diversifying from the main line to a variety of different end markets with more technical specifications, but overall, do we now see the growth in the rail EPC segment moderating or coming in line with the T&D kind of portfolio with 10 to 15% kind of growth? The very high phase growth of 30-40% broadly is behind. Am I right, or probably we might still see some upsides in growth as and when we foray in international space in this vertical?
So I think you are right that we will not be able to see anything beyond, let's say, best would be around 20% if it happens. See that the base is growing. This year we'll end up with close to 4,000 crores. On a 4,000 crore business, I cannot expect to have a 30-40% growth. That's one part where the base has gone up. And second, obviously, if you remember, we have been talking for the last 2 or 3 years about electrification coming to an end. I think so some pieces are changing. However, we are very confident of what we are seeing on the metro side. We are already very close to bagging some international orders. One of the railway orders, what we are talking in the international market. So maybe, and the order sizes in international are larger. So if we are lucky and if we get one or two large orders, then maybe in some years you may see a spike up on the percentage. But I think for the time being, a 15% to 20% of growth should be, I think, a good estimate.
Sure. And so lastly, definitely would like to appreciate and acknowledge management's effort to, successfully diversify its portfolio into the civil business, civil or oil and gas, and build a good credible portfolio there. But along with this diversification, especially in the non-T&D business, the core working capital intensity of the business as a portfolio for KEC should have substantially reduced. So, from the structural perspective of working capital intensity reducing with changes in mix, by when do we expect the changes to start actually reflecting in terms of our books, net working capital intensity coming down, and probably incremental growth requirements not coming on the debt side, and probably deleveraging process seeing some acceleration there based on the free cash flow?
Yeah, this quarter itself, if you look at our non-T&D business was 52%, and T&D was only 48%. So going forward with the growth numbers which we talked about, T&D 10%, railway more than that, civil will definitely grow by at least 50% next year. Oil and gas will probably grow by 150 to 100% next year. So clearly, and if you look at civil and oil and gas, there the working capital is virtually negative. Okay, and even for a case, we had a cable business doing well there, again the working capital is negative. So I think once we are able to push these businesses more and more, we do expect that the numbers will start improving. Rajiv, you want to talk about this, about the going forward and what do you expect on the working capital, etc.?
Clearly, Renu, we expect that civil vertical has a much better working capital, intensity as compared to the right now T&D and the railways. So with the growth, with the expected growth in the civil vertical, we expect for over the next at least 2-3 years it will grow at a much higher percentage. And similarly, cable has shown decent growth this year by almost 20-25% growth over the 9-month period where the working capital is negative. So both these verticals put together, I think will constitute about 20-25% over the next couple of years' time. And then we expect the working capital intensity to be much better. Okay. And that will help us to overall, let's say, manage our working capital more efficiently. Maybe we'll be able to reduce our overall working capital debt and interest cost accordingly.
Got it. Thanks, sir, and all the best. Thank you.
Thank you.
Thank you. Before we take the next question, a reminder to the participants, please limit your questions to 2 per participant. For any follow-up, may be requested to rejoin the queue. The next question is from the line of Ashna Manaktala from ICICI Securities. Please go ahead.
Yeah, hi, sir. Good morning. Sir, my first question is in terms of
Ma'am, if you can speak closer to the handset, please. Your audio is not audible.
So my first question in terms of interest cost. So for 9 months, as we are now at 2.3% of sales, as you mentioned, and interest rates globally and both on the domestic front are going up. So how much further can we expect it to expand for the coming quarters?
Our expectation is that interest cost for the year as a whole, still we expect we should be able to manage within 2%, which is comparable to the last year. Reason being that, Q4 we expect a much higher revenue in Q4, and generally our Q4 the interest cost goes down below 2% because of the higher number and also because of the larger collection which generally happens in Q4. So our expectation is that for the interest cost for the year as a whole will be well 2%, around 2%.
Okay. And coming to SAE, so you mentioned that recently you've not booked any EPC orders. So out of the total order book that you have of around 1,200 crores, so what would be the proportion of the EPC orders in the overall order book? If you can give that number.
So right now in the total order book of SAE, we have close to about 1,000 crore order book, and EPC portion will be about 20%.
Okay. And if you can squeeze one last question. In terms of Afghan projects, like you mentioned, there has been no execution lately. So is it due to difficulty in terms of execution, or is it that the payments from the multilateral agencies are being stuck?
So to me, it's not a question of multilateral payments and all that. Basically, because of the Taliban takeover, everything has been put to a stop. Okay? There is no one from the multilateral agencies on the ground. So while we have the store, we are maintaining everything. We have got around 50, 60 local employees at the sites maintaining everything. Obviously, there is the entire payment mechanism has been frozen. So if we do the work, there's no way in which we can get payment for that, which is why the projects are on hold.
Okay. So how do you think it is going to be going forward, or it is going to be a challenging piece going forward?
It will be a challenge for some time, but I think very clearly the world and the Western world cannot keep Afghanistan payment systems cut out. So there's a lot of talks happening saying how will they resume the payment system, but dollars have to be made available for buying essentials or buying other things and all that. So I think it's a matter of time that basically the US and the European Union reaches an agreement with the Afghans on what needs to be done, how the payment channels have to be reopened. Once the payment channel reopens, we have had enough discussion with all the multilaterals who are ready to make the payments. So it's not a question of that they are not willing to make the payment. It's just the channels are blocked right now. Once the channels reopen, the payments will happen.
Okay. Thank you, sir. That's it from my side.
Thank you.
Thank you. The next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Namaskar, Vimal sir, and thank you for this opportunity. Sir, firstly, if you could explain, sir, what is our scope of work at data center and the oil and gas portfolio, sir?
So data center mein, Saket ji, we make the complete data center. In the first order, we have done everything, including interiors and MEP and, chahe aap lift lagana ho, saman. Like the whole thing was a plug and play where the data center operator can come in and then install whatever he has to install. So that one was a complete civil, mechanical, MEP, वगैरह सारा मिला के electric power वगैरह all that. Currently, when you do a larger data center, sometimes it's a combination. कभी आपको सिर्फ सिविल का ऑर्डर मिलता है, कभी सिविल प्लस MEP मैकेनिकल मिलता है, तो डिपेंड करेगा किस तरह का ऑर्डर है. The second order which we have got is right now only civil, where we will build the entire data center. The MEP and electrical will come in as a second package, which we are hopeful of getting also.
करेक्ट सर. और अभी ऑर्डर बुकिंग. हाँ सर.
Oil and gas में right now, so there are two parts. One is our civil business, which is quoting for various oil and gas projects like tankage बनाना है, process pipeline लगानी है, वो सब करना है, process units बनाना है. So that is a civil and mechanical. The second piece is जो हमने acquisition किया है, that is for oil and gas pipeline. So जो cross country pipelines लग रही है, वो काम कर रहे हैं.
And there is also sir, we are an EPC player, जो subsidiary भी हमने जो company purchase की है.
Absolutely.
Okay. Sir, how has forex played sir for this quarter? What is the impact of forex? And जैसे sir आप लोगों ने पहले भी बताया कि aluminum has been the talking point sir for this call sir. Many times you have articulated and spoken about aluminum. तो sir aluminum का exposure कितना है sir हमारा? What is our requirement? If today we have to execute, what is the amount of the quantum of aluminum, and what could be the MTM impact sir? If we can extrapolate the same sir.
I don't have the exact number today. I think we'll have to wait, and maybe if you talk to Abhishek later on, we can give you the numbers. But जैसे मैंने कहा कि हमारे को अभी कोई जल्दी नहीं है सप्लाई करने की. We will take our own time to supply. Fortunately, these are orders which are long term in nature. तो उसका टाइम है हमारे पास अभी करने के लिए. और forex में Rajiv, you want to give an answer on the forex, please?
Yeah, forex has been working well for us. I think we are selling all the whatever forward is to be sold, so we are taking timely action, and we are actually selling, and we have reduced our foreign currency borrowing, and we are selling more forward which are future receivables on the confirmed orders. So total for the 9 months period, I think we have booked a gain of roughly about 50-55 crore rupees on a net basis.
And for this quarter, sir?
This quarter, I think it is about 15 odd crore, if I'm not mistaken.
15 odd crore and 50-55 crore is the total 9 months number.
Period. That's right.
Right, sir. And lastly, sir, about this quarter 4 being the largest quarter in terms of executions also. So last year, sir, out of the total top line, if I'm not wrong, we did 33-34% of our revenue. So this year also, sir, on the ballpark number should be in that vicinity only, sir?
Broadly, देखिए, we are hoping, although we had earlier said that we will do 15% knowledge, but that is out of the window right now with the current ways of things are happening. Okay, I think we are hopeful that we should reach an overall double-digit growth. For that, I think I don't have the exact number, but I think 35% तो होना ही चाहिए. Okay.
Sir, didn't get the last point, sir. फिर से बोलिए.
I said normally 35 to 40% होता ही है Q4, and I see no reason why this quarter also we will not be at that number. Okay.
Right, sir. And last 2 points on the tax rate, sir. We will be MAT paying. Rajiv ji.
No, there is no MAT. We are paying a regular tax, so we are not in the MAT because of the losses in Brazil. But at a standalone level, we are doing decent. So we are paying normal tax rate. So on the Brazil losses, we are creating the tax asset.
Right, sir. So lastly, on this water pipeline layout also, sir, we have seen that EPC players have not been tendering, not releasing orders, even holding orders from the government. Sir, इस front पे Jal Se Nal scheme and all में, how are you seeing the traction, sir? Just like in your case, you are just extending the deliverables for the T&D segment because of the purchases in aluminium and other base metals. Even in the DI pipe segment, what we are observing is that the tendering process is not happening because of the higher raw material prices and margins being completely squeezed out. So, sir, finally, when will this deliverable start happening? How is the pipeline going to look like? And आपके पास जल से नल के स्कीम के थ्रू में भी EPC का क्या पोर्टफोलियो में है आपके पास?
नहीं, हमारे तो सारे ऑर्डर उसी में हैं. The good part, Mr. Kapoor, is that most of our orders have been taken this year with the current pipe prices. Okay, so we don't have any major issue in releasing orders for pipes and all that. The second piece is that the EPC orders in this schemes have a price variation also. The third piece is that clearly with the steel prices coming down, the DI pipe and all other pipe prices have also started coming down. So at least we are not having any major problem in releasing orders for the DI pipes or anything. In fact, we will see that in our civil business, water pipelines and all are playing a very decent role. Thanks, Agiji. Thank you.
Thank you, sir, for all the elaborate answers, sir, and all the best, sir. And you have told about some key changes at the team, sir. I missed that point. Any key changes at KEC?
You just said that we have a new CEO at the KEC Brazil.
Come again, sir. Hello.
We had a new CEO at KEC Brazil. Okay.
Okay. Thank you, sir, and all the best, Rajivji, and thank you very much, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Charanjit Singh from DSP Mutual Fund. Please go ahead.
Yeah. Hello, Rajivji. Hello.
Hello.
Yeah. Can you hear me?
Yeah. Yeah. Go ahead. We can hear you.
Yeah. So my first question is specifically on civil infra. So civil infra, the quality of jobs and the nature of jobs now which we have started taking has improved significantly. So from margin perspective, any thoughts in terms of what we were expecting earlier and what we will be able to deliver going forward? That's my first question.
I think, Charanjit, on the margin front in civil, we are also reasonably or pretty happy with the margins which we are seeing. I think everyone had cautioned us saying that the margins in civil are less and the capital and all that. I think we are very happy with the margins which we are seeing, and that is across all sectors, whether it is metros, whether it is water pipeline, whether it is residential or industrial, and even public places. So I think generally we are happy with the margins which we are seeing in the civil business as a whole also.
Okay. And sir, on the international T&D front, in terms of the margin profile and the incremental orders and the competitive intensity there, if you can touch upon that and quantify also in terms of how is the margin profile right now there?
So international, the profile depends upon the region to region. Like if you go to Africa, you'll always have 10, 12 people, and you'll have Europeans, you'll have Chinese, and everyone, Saudi players competing. You go to Middle East, the competition is relatively limited between 5, 6 players, couple of Indians and a couple of local players. You come to the SAARC region, you will have Indian, Chinese, and sometimes Japanese. So that way the competition varies. Africa is obviously more competitive in terms of the number of players putting in bids. Margins, I will say, would depend upon individual orders rather than individual areas or we'll say geographies and all that. As I've always been saying that if a country like Saudi, we can be at 4% margin, we can also be at 20% margin. Same thing applies to most of the other regions also. So margin is more specific to a project than to a local region.
Okay. And so lastly on railways, railways actually if you look at overall number, what spending happens of almost on 2 lakh crores. So the opportunity size is pretty big, and we have, seen a good uptake for us in the revenues till now. And going forward from a tendering perspective and order finalization perspective for next year, what is your, view on the railway segment specifically? And if you can give more color in terms of, EPC, OHE work, as well as signaling work, how are we positioned in each of these segments? Yeah, that's all from my side.
So conventional OHE has come down significantly. Right now we have got, I think, 7 or 8 orders on that mission Raftar, where they are replacing the conventional OHE by high speed, high capacity OHE. Okay. So that's one area which has been going on reasonably well. I think otherwise what we have seen is a general slowdown on the conventional spending. Okay, for whatever reason. Government I think has been focusing on increasing the speed, so doing some work on those things. And also obviously on the metro side and development on the northeast. So we have been seeing a shift in the tendering happening more towards, let's say Assam, Tripura, and all those sides where a lot of tenders are coming in, which are difficult areas to also make money. Other piece was that after COVID, the government had taken out the need for putting in a bid bond. because of which what we have seen, especially in railways, that the competition had increased significantly. As I said last time, in the tender, we saw 53 bids coming in a railway tender. Now that the government has restored that piece where you need to put in a bid bond, we are clearly seeing that market competition is coming down significantly. I think that will also be another factor where we will see the share in the railways going up. Metros are doing very well, where obviously the competition is very less. You hardly see 3 players, 4 players in every metro bid on the electrical side. Okay, I think that's where we are focusing as part of our railway business.
Okay. Thanks, Vimalji, for taking my questions. That's all from my side. Thank you.
Thanks, Vimal. Thank you.
Thank you. The next question is from the line of Rishabh Dugar from CD Research. Please go ahead.
Hello.
Hello.
Good morning. Yeah, so my question is, your debtor days is somewhere around 160 days, and it has been there for quite a while. So I just want to understand that what kind of initiatives are being taken by you to bring it down.
Rajiv?
Yeah. So, Rishabh, if you look at debtors days, 160 days or so, that is a normal debtor for the EPC industry, if you look at per se. So, what happens is that you generally on a EPC project, you have, progress debtor, which is you are doing, monthly progress, then the measurement happens, and then you are able to bill. And then after billing, the customer takes about 45 to 60 days time to, generally pay. And so generally the cycle is between 90 to 120 days. In few cases, there are payment delays happen, for example, in railways and etc. So it is normally, for all the EPC industry, if you look at generally the progress debtor will be roughly about 120 to 150 days or so. So that's a general trend in the industry, and we are trying to improve, the billing cycle in terms of, more putting a lot of efforts in terms of, billing on a monthly basis, fast checking the joint measurement certificate with the client. So there are a lot of efforts which are going on in this direction, but currently, it is what it is, at 150, 160 days. But definitely, the efforts are on to improve the cycle. As I mentioned previously also, in civil, our cycle, working capital cycle is much better, where the client generally pays after raising the bill, they pay within 30 to 45 days. So with the civil turnover going up and gaining more share in the overall pie, the overall working capital should come down.
Okay. So could you give some brief estimate about where do you see your debtor days moving forward in the near future?
The idea is to bring it down to, the progress debtor should come down to 100, 120 days level. So there is clearly, 30 to 40 days improvement which is possible, and we are making all the efforts to achieve those numbers.
Okay, so currently what you are saying that in the near term it would be around 150, 160 days. That's what in the near term.
Normally what happens is that, in quarter 4 there is generally a lot of collection, so it comes down. You are seeing these numbers, in Q3, so they are slightly elevated at this level. But the way the efforts are going on, I think it will take some time. Probably next year we should be able to bring it down once our collections from the railway business becomes normalized. We should be able to bring it down at least by 30 days.
Okay, that was on my side. Okay, thank you.
Thank you.
Thank you. As there are no further questions, I now hand the conference over to Mr. Vimal Kejriwal for closing comments. Over to you, sir.
I think I would just like to thank all the people for their continued interest and would just pray that everyone stays safe. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, on behalf of KEC International Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.